All right, check, radio check. I want to thank everybody for taking time out of their busy schedules to join us. This will be a relatively easy conversation because I'm going to be touching back on this here in about 2 weeks again, because it'll be time for technically it'll be the April update, even though it will be May, right? So I know it's a little confusing, so just bear with us. But this data is, how did we look for the month of March? So if you've not been on these calls before, really this is a rear view mirror approach towards what has the market been doing so far in 2023. And this is a snapshot of equities. So as we look at this and we see that in the corner, we have the purples, we have different colors, but we look at the month. I'm not going to give a lot of weight to the monthly snapshot. I mean, we have some things happening in the economy. We've had a couple downward days, but I think if you look year to date, we've been on an upward trend, right? So we've actually been doing okay, a little bit of a recovery. Some may even say it's a bull. I'm optimistic. What I look at here, though, is what did well so far this year, and the line green is the European countries, developed countries in Europe, and part of that is because they had a mild winter, and a lot of it, they're relying on natural gas, and some of those worries seem to have gone by the wayside. So it's for a quarter it's done pretty well, and then not far behind is the U.S. economy. The U.S. economy has really been surprisingly resilient. We will see some pressure, I think, towards the end of the year. I know a lot of people have been calling for a recession. I was looking at a slide earlier today that we did have a little sort of, you could technically call it a recession, a sliver, about a year ago, where you had 2 negative quarters of GDP, which is a pulse of the economy. But, overall, it's rebounded. And I think that the reason that it's different this time is because, relatively speaking, our unemployment rates are low, right? So as much as the Fed, which just raised for the 10th time interest rates, trying to curb inflation, which we've been talking about, there's still some optimism in the markets. And because of some of the supply that the government has put out there, the subsidies that it's put out there is still being worked through. I would say that maybe towards the end of the year, we could see maybe some pullbacks again. But right now, you're going to see continued volatility. So, the equity markets, this is why, a lot of our clients, we're still in them. We've still been, strategizing with structured notes, and, gives us a little bit of that bond alternative. But you'll see on the next slide, let's talk about the triple cross, right? The three indicators, which is you have the RSI, Relative Strength Index, the MA moving average crossover, which is in the middle of the field. And then lastly, you have the MACD, moving average convergence divergence. So because we have, I think, relatively close to seeing a crossover here, but it's not there yet, right? So we could see, we've seen that before, where we've had red lines and it starts to pick up and then it comes back. So pullbacks are not out of the question. But there's nothing really alarming on this chart to me, or something that's sort of soothsaying or futuristic in my predictions that, hey, listen, things are all clear. I think that, volatility is going to be the word of the day. So that's our equities position. Now we look at income. And again, short term, 1 month, I look at the pink here. I will tell you that the two areas, the pink and the powder blue, those are treasuries. And typically people, a flight to that type of investment strategy, government bonds and longer term government bonds, is a sort of a knee-jerk reaction to having some sense of safety. So as we look at the year to date, the yields have all been finally a little bit better. But we look at that 20-year treasury, and for the year, the U.S. government treasuries have been the winner. I don't know how long that'll last. I mean, it's, as interest rates continue to rise, you'll see that old 20-year bonds are now coming due, and they've put out some fresh offerings. So as we look at this, if you're in an income fund or an income strategy, here's the one thing. I think that this is the area where we'll always can count on some type of income strategies, right? It's that sort of steady Eddie, the tortoise wins the race, patience, perseverance, less emotional. We're not swinging for the fences if you're in some type of income portfolio. And again, in the past, I've been a little guarded against bonds, but in your current portfolios in rising interest rates, which we just have felt for the last 2 years, like I said, it's been the fastest rate increases in 40 years, right? So 10 to date, right? So the market has a lot of that baked in. So I think the equity side, there's a lot of pessimism out there. There's a lot of things, we call it the wall of worry, right? Where you could say, hey, there's a lot of things to be concerned about. I do not dismiss that, right? You have just last week, you have now AI is the culprit, right? The villain. And so with so many things on the horizon, having it baked into your portfolio, especially as you approach retirement, should be, I think, some type of diversification. And that's why, again, we like for sort of a healing effect, not only with some type of ETFs in a bond portfolio, but also structured notes, or you're going to hear me start to talk about, and I think I might cover this next week, something called buffer ETFs, which are a way for us to get some gains. But I think that now as interest rates start to increase into the future, corporations then can start to pay a little bit higher dividends. And although dividends aren't guaranteed, when you start looking at aristocratic stocks or build in some type of portfolio that you're getting a dividend from equities, right? These combination of strategies to help you to fill that income gap is sound. So, I'm optimistic that the income section of the arena, I'm less concerned than I was before. But if you have concerns about market volatility, maybe some of the equities into the future, you're looking for different strategies, reach out, give us a call, and we'll give you our 2 cents. So that's year to date on, just equities in general. Everything's above 0%, which means if you got some money in that portion, some balance of your asset allocation into some type of income generating portfolio, right? We typically for our retirees like to shoot for 4%. So they're close to that. They're getting back to some semblance of normal as rates continue to rise. And then, this is where I was going to start to say we're probably close. Again, I'm not a futurist. I don't have a crystal ball, but I do see that, we're probably close to seeing 3 crossovers. If that happens, that RSI up top comes, we could turn around and see a green line again. So we'll keep you informed. Remember, this is 1 month ago. And again, just the S&P and the NASDAQ on the equity side has just finished at its highest in a year, lowest lows. So it's highest, lowest lows, right? So those are the equities. This is the income portfolios and ETFs. When you get a crossover, you get a green vertical line, but the MACD on the bottom seems close. It's already crossed over on the moving average crossover. So we're just waiting on the RSI. And we could start to see that, hey, some of these income portfolios are back to normal. We could see an upward trend. So that's a mouthful. Hopefully that made some sense if you've been on my call before. Now, lastly, I want to talk about our recession probability analytics tool. This is proprietary to Brookstone. The number is down from last month or from February. February, we got as high as 91. It's still above 50. It's at 84. So again, the sky is not falling, right? But I do want to point out that it does give us a little bit of pause, saying that, listen, where we put our money matters. And especially as we head into retirement, right? What I'm starting to see, me personally, I've had 3 meetings this week where positions have been either there was an M&A or they've been, now they've been, sort of reassigned, maybe possibly even lesser income into the future. So everybody's circumstances are different. I try and keep my you're close to the streets as to what I see going on. And typically one of my areas that I pay attention to is construction contractors and how busy are they. So right now they are busy. They got more work than they can handle. How long will that last? That depends. But I am start to simultaneously see people in the white collar arena start to either get laid off or reassigned to lesser paying positions. So keep that in mind. Now, the last part of my slide before we go any further, I want to talk about, our upcoming events. So you may have heard advertisements. I used to advertise on New Jersey 101.5. I just had a client annual review last week. And it was funny because her and I met from one of these events, Road to Financial Success, back in 2006, 2007. She's getting closer, but she's now, it really gives me a lot of comfort knowing that I worked with somebody for so long and to see him get to the finish line. And we're very close there for her, but she's in a good position. My point is I have some events coming up, and these events, although I did 2 last week on Medicare is one of those areas where, and Tom, I think he was there at my class last week, and he's been on my call every week, and he and I met at a past New Jersey 101.5 as well. So, my point is that if you can make some of these events, they're really important, but it's not just for you on the call. As I'm continue to study, I'm dedicated to learning more. There are some things that are coming up. And the first is, write this down, everybody on this call, May 18th is New Jersey 101.5, 7 o'clock. That Thursday, I will not have a chat with Chris. That will be a Facebook version of a TV interview. Eric Scott, for those that know him, he's got a pretty pronounced presence in the radio world. Will basically be interviewing me for about 30 minutes, right? And so that's not just for here, that's for people in your life that you can get some questions answered, because I can tell you I'm really excited about some opportunities that some of the industries have created as far as solutions for families, right? It's one of the biggest risks that people can face as they enter into retirement and even pre-retirement is extended care of a family member, whether it's you personally that's on this call or your parents, right? Your grandparents. And, a lot of us, myself included, I have younger children. So it's what I refer to as a sandwich generation. So I've confirmed 3 out of the 4 dates. The first will be back at Mercer County Community College. That will be a Wednesday night. It will be, notwithstanding, about 100 seats that Rutgers is going to allow us to come back and use the business school. That's on the 14th, and on these, actually, I got to fix that. Saturday, I'm sorry, I got pressed for time. Write these dates down. So it's Wednesday, June 14th, Rutgers Business School. That'll start at 6:30. The 17th, Rutgers Business School is a Saturday. That'll be 9 from 11. That one at the Eco Complex is tentative. I have phone calls into them. The woman's out. So we'll start to talk about that and confirm. As I told everybody that was at the event last week, the 2 nights, and the people that will be getting emails, I sent out a bomb video giving people the invitation. If you register, you can go right to Professional Planning Services, right, .com, or just go to PPS-LTC. So those 2 spots will get you a seat. You get locked in. There's no cost to attend, and it will allow you to take a spot, because especially the Rutgers Business School, there's only 100 seats. I know that because I picked the classrooms. I've been and used that when I've done federal employees before, and that room, it's for students. So, it's locked up. I got it. I got confirmation those 2 dates. So that's a Wednesday, June 14th, Saturday, June 17th. But as soon as this hits live on the radio, so we're just doing commercials, but we have not done the Access Live. As soon as I do that presentation on the 18th, I'm telling you, they're going to be sold out venues. So if you know anybody that should be here, you can think of anybody. There's 4 dates to pick from. I would encourage you strongly to get there. And then if you can, now I saw somebody just raise their hand, Shirley, so bear with me. I'm going to try and answer your question. If you did ask a question, or I'll just unmute you and say, hey, go that way. So let's see, let me unmute you. So Shirley, did you have a question? I asked to unmute you, so I don't know if I saw a hand go up by you, so I'm just trying to be responsive. So that's it. If I haven't heard from anybody else, then I want to wish all of you a great day. If you need me, you got my contact information. And then lastly, I want to just play our disclosures.